Pablo Suarez there. It's always great to have him and his interactive sessions for the InsuResilience Global Partnership Forum. And of course, Pablo and Good Games helping us change perspectives there, because as we know by now, it's only by understanding each other's point of view we can actually work together successfully. A great lesson. Now, let this excitement carry on into your regional sessions, which are taking place now in parallel. The first one, or in parallel, there is no first or second, there is the African session. And in that one, you will hear lessons learned from 5 leaders with decades of experience in climate and disaster risk finance, all based in Africa. We will explore how their work has unlocked value through working from the grassroots, creating of solutions that link to existing structures, that are empowering and that promote transparency and accountability. The regional session on Africa will be moderated by Ms. Marcela Tarazona from Genesis Analytics. It's available in English and in French. And then there's the Latin America and Caribbean session. In that one, we will learn more about how the UN World Food Programme, the Inter-American Development Bank and Micro have launched specific risk finance approaches and how they have been implemented on the ground. Countries in the region offer interesting opportunities to move insurance beyond pilot initiatives towards sustainable and scalable programs. This session has been organized by the World Food Programme. It will be moderated by Ms. Paula Pañez of Willis Towers Watson, and it is available in English and in Spanish. And if you would like to participate in the African regional session, then please stay right where you are here in the live stream. If you would like to participate in the Latin America and the Caribbean session, then please click the button below the live stream. And I will see you again after the regional sessions. Enjoy.
Welcome everyone to our Africa session. My name is Marcela Tarazona and I'm the head of the climate finance team at Genesis Analytics. Together with me, we have an amazing panel that I'll be introducing in a moment. But I'll first start with sharing with you the objectives of our session. Next slide, please. So we've heard this morning about various speakers, including the Nobel Prize Professor Banerjee, about the importance of evidence and of increasing awareness and the challenges that we face in getting demand to climate and disaster risk financing and insurance. I think that was a very good opener to our session, in which what we're trying to bring is the experience of people who have worked in the field in many African countries and have had success in engaging the government in buying CDFRI instruments. So this session will bring together 4 African leaders that have experience working in this topic. And we will discuss their lessons learned. The idea for us is to explore how their work has unlocked value through the creation of solutions that link to the existing structures that are empowering and that promote transparency and accountability in the countries where we're going to work. So please, next slide. I don't know who's, okay, sorry, I cannot see the same thing as you can see, as Paulo was saying, but I see now we have the session objectives, which is different from what I see on my screen. So I think I've already shared the session objectives, so if you can move to the next slide, please. Okay, and the next one. So I will start this presentation with giving you a short introduction to the reason why we are sharing this session, Genesis Analytics. So the next slide, please. Yes, exactly. Thank you. So just quickly to share, I have been working for many years very closely with the InsuResilience Global Partnership, and it's for me an honor to be able to organize this session in this capacity. I joined Genesis Analytics in April this year, And I think it's a very exciting opportunity because this is a company based in Johannesburg with country offices in a number of African countries. And we basically have a very depth knowledge of the financial sector in many of these countries. So in this slide, you can see that we have worked in 45 African countries. So together in the panel, we have people who will be sharing with them our lessons. But I think in this slide, which will be available later on, you can see the work that we do. One of the areas that we really work on is the area of developing and implementing and assisting governments in the design of climate and disaster risk financing initiatives. Next slide, and I will introduce our panel. Thank you. So in our panel, we have Mr. Eric Rugwangba, Director General of Financial Sector Development at the Ministry of Finance and Economic Planning in Rwanda. We've heard from him earlier today. Mr. Cecil Narte, who's a Program Coordinator for the Disaster Africa Risk Capacity at RIFI, at the Africa Development Bank. Mr. Barnell Chirum, Chief Underwriting Officer at the Africa Risk Capacity, and Mr. Andrew Mood, who leads the Agri-SME Development and Innovative Finance and the African Development Bank. So I will first, so we're going to have like two parts in this session. The first one is going to be Mr. Rigamba, Mr. Naite are going to give some thinking, and they're going to share the experience they've had on their programs, after which we'll have a bit of a discussion with the four of us, more of the form of a panel discussion. So if we move to the next slide, I will quickly introduce Mr. Rigamba, for those of you who were not in the session of this morning and who don't know him well. So Mr. Rigamba, he is overseeing nationally important initiatives related to the financial sector and development in Rwanda. I was very inspired this morning when I heard him talking about all the work that he has done in the country, especially in the integration of social protection and disaster risk financing. I think for those of us who have been working in this topic for so many years, at the beginning we would only think about bringing the money into a government. But recently, in the last 4 to 5 years, there's been a refocusing on making sure that we also think about how to make sure that the money goes to the right beneficiaries, in this case, and very often through the use of social protection instruments. So I'm going to move to Mr. Rigamba, and I would like to start by asking him a couple of questions that he will be answering in his presentation. So, Mr. Rigamba, very much thank you for joining us and welcome to our session. You're going to be starting our session. So we would like you to answer the following two questions, the first of them being, what are the key discussions that as a regulator and as a state planner you regularly hold regarding disaster risk, in particular to identifying the needs for CDRFI products? And the second one is whether you can share some lessons learned around the ideal characteristics of a financial product for disaster risk financing from the public sector protection, ideally with examples. So again, here we're trying to hear the demand side of CDRF. So not just thinking about the donors and those designing the instruments, but what can we learn from a government who has been working with this international community in getting successfully implemented these strategies. So over to you, Mr. Rigamba. Thanks.
Thank you so much, Marcela. Distinguished participants, good morning, good evening, good afternoon. It's still a pleasure to be here and join this discussion. Quite interesting questions. I'll try to make an attempt to frame a response to them. I think just as a background, just like other nations globally, and Rwanda has witnessed a number of increased disasters taking place in the country, like floods. They're quite common in Rwanda, but also in the region, droughts, landslide, earthquakes. We experience quite often volcanic eruptions. And of course, these have culminated into losses to our people, losses to property, losses to infrastructure. People have been displaced because of these disasters. And of course, item in the country. Domain to march the on the table that are on the agenda. Stakeholders and that is the background from the I think allow me to share our experience where a specific climate and disaster risk financing product was developed and implemented through a public-private partnership. And for me, that was the most interesting bit. And the aim was to see how we can reduce climate risks, climate and disaster risks using financial instruments. And related to that, from a country point of view, or from a government perspective, that was important also to see how we align that to the national development plan and how we can transform the agriculture sector, especially trying to reduce the risks that are faced by smallholder farmers and other actors along different value chains. So it was from that time that a national agriculture,
Apologies, may I intervene here? We have problems with the main platform. We cannot hear Eric Rigomba on the live stream. We are trying to fix this issue as soon as possible.
Can I wait a bit for that matter?
Sorry about that, Eric. I can hear you.
Yeah, I was wondering, should I pause a bit as we wait for them to fix the issue?
I think that's what I've asked us to do.
Okay.
1 second. Okay, I got the cue. We are okay now. We can hear you again. The sound is working, Eric. You can go back live. Apologies for this problem.
So does he have to start again, or
No, he can continue where he
start?
started. Now the sound is synchronizing.
Thanks.
Right. Thank you so much. I'll try to probably to connect the flow of the experience trying to share. So I started from saying the problems around disaster and the climate and disaster risks are real. We face them in the country. We brought everyone on the table, from public, private, and smallholder farmers, to tackle the problem. We created the working groups in a form of stakeholder coordination. We also put in place a legal framework, and that only provided an environment where now started using the financial sector instruments to de-risk the agriculture sector through developing a national agriculture insurance scheme that will try to reduce the impact of climate and the disaster risks. And so I was trying to move to a point how the scheme was designed. It was designed to mitigate the risks and losses incurred, especially to small-scale subsistence farmers. And in that, what was very key is to seriously look at the principles of human-centered design, which would look at the scheme's futures and the risks to be kind of based on the needs of the people, taking into account the context and the comprehensive risk management for the country. In terms of the design, the process, the futures, and probably key lessons. One, we started all the way from the feasibility study. Map out the needs in the market, bring everyone's views into the discussion, and then we developed a blueprint, which was agreed upon through a very wide and extensive consultation with the key stakeholders. And then we went on to implementation. So we agreed that for us to be able to roll out a scheme that is sustainable, then it was important that we bring the private sector on the table. 5 local insurance companies joined the scheme. We brought in international insurers to kind of share the risk and transfer part of the risk. And then we used different aggregators, like cooperatives for farmers, cooperatives for input suppliers, and trying to use other models where we see banks and the MFIs trying to create bundled products between with the credit, with insurance, and all this was to say, can we get everyone on the on the table, design together, implement together? After that was done, then awareness started through a number of extension services and extension service providers that would now reach out to farmers, create awareness, educate them, mobilize them why they should actually protect themselves and their businesses against climate and the disaster risks. And now the discussion went on to say, what should be the roles of everyone? So the design, the rollout, the implementation, but also the cost. So the government decided to provide 40% of the total premium as a subsidy to all farmers. And the intention was to say, how do we make this product affordable, even for those who are vulnerable, even those who are low-income earners, and to ensure that the scheme is based on a very strong foundation. Then technology was introduced into the scheme, where the government, especially for livestock, financed technologies like radio frequency identification microchips to ensure that we have information and real-time information, and also be able to provide some unique identification, and in many cases reduce the fraud cases. So all these were put together to ensure that the scheme is sound, the scheme is stable, the scheme is serving the right segment. And so we have seen from this, we have seen some success, some achievement. I must say, I think we excited, especially for some reason. One, out of the 5 insurance companies, 4 of them entered this space for the very, very first time. And for us, that was very important. And they helped to increase penetration. 2, we have seen farmers that were able to uptake this, this product, again, for the very first time. And all that played together to build the resilience for these small-scale farmers, increase penetration, increase the capital base for the insurance company from the private point of view. And as the risks are reduced, then we see a situation where a buffer is created to stop the viscous cycle of poverty, especially towards the government agenda to reduce poverty in the country. And then, most importantly, we have noticed a bit of improved the pressure in terms of the fiscal outflow when these disasters occur. So in short, those are some of the lessons we have seen. We have seen it working. We have seen working where it has never been possible. And Marceline, probably those are the key highlights that I want to share with our experience in Rwanda. Thank you.
Eric, thank you so much. I have to say that I don't know if you remember this morning, I think it was Annette who mentioned, or Astrid, the 5 purpose principles of the InsuResilience, one of them being ownership. And there's also the 7 habits for highly effective disaster risk financing of the Center of Disaster Protection, which is engagement. And I have to say, I mean, you shared the experience of the discussion with policymakers, highlighting the importance of this human-centered approach, taking into account the context, the people, and partnering with the practitioners in the private sector. This is really an amazing example from which I think we can all learn about how to make sure that we have the demand side of this problem involved in the design. So thank you so much. I think it's incredibly rich what you've shared with us. In the interest of time, I'm going to move to our second speaker, Mr. Cecil. Cecil, move the slides. I hope it's working. Mr. Cecil Narte. So, as I mentioned earlier, as the Africa Development Bank, Mr. Narte is leading the development and implementation of a flagship program in the area of climate and disaster risk financing called ADRIFI. The work that he leads is basically engaging with Africa Union member countries to enhance the resilience and response to climate shocks. Mr. Narte has a master's and a PhD in agricultural economics from the University of Reading. Cecil, it's a pleasure to have you here. I know you've been traveling quite a lot, so we've been testing your technology from different places. Let's see it work.
Yes, Marcela, I hope you can hear me.
Yes, someone is typing, and apparently that's creating some noise. So if the person who's typing can mute him or herself, that'd be great.
Do you want me to go ahead now or mute?
Yeah, so I guess, so just to say, so basically really what we want to hear from you is, what are the lessons learned that you have from working with national governments through ADRIFI? And you can share a little bit about ADRIFI. So the floor is yours, and very much welcome.
Thank you so much, Marcela. Thank you also, Eric, for the foundation that you have laid in terms of what you are doing in the Rwanda disaster risk management and financing. Yes, I will present on the Africa Disaster Risk Financing program, which is being implemented by the African Development Bank within the last 2 to 3 years. The program, otherwise known as ADRIFI, is to enhance the resilience and response to climate change and shocks of climate change by the countries that we serve, basically African countries. Now, the two areas of intervention of the program include capacity building and premium financing. I will give you a little bit of details of the two areas. Now, in terms of the capacity building, which is the first component, we work with the countries to develop or to define their risk, be it drought or floods or tropical cyclone. And once they have defined their risk, we work with them to design early warning systems and then to elaborate comprehensive disaster risk financing programs, contingency plans, and then work with them to transfer the risk to the market. So basically, this is what we do with the national governments, or most of the countries that we work with in Africa. Now, in this particular component, we collaborate with the African risk capacity for the risk profiling, early warning systems, and the elaboration of the contingency plans. Now, the second component of the program on the premium financing is where we work with the countries to pay the cost of the insurance, the sovereign insurance premium to ARC. Now, the way we do it is we use two instruments, and I will come to that in a minute. But apart from the premium financing that we support the countries, we also work with them to elaborate comprehensive disaster risk financing strategies. These strategies are supposed to look at the country's array or levels of risk, what kind of options or financing arrangements they have in place for addressing which risk or the level of risk. And we work with them to elaborate what options they can explore in terms of any gaps in financing of the different levels of risk. So the disaster risk financing strategies that we develop with the countries is very key to incorporate sustainability into the program. Now, it is important, this paradigm shift have become very important as most of the countries used to depend on the donors for humanitarian aid in addressing disaster risk in the country or the event of disaster. However, this approach, which is an ex-ante approach rather than ex-post approach, encourages the country to be more proactive in managing disaster risk rather than being or doing it in a rather ad hoc manner. So yes, the approach is the ex-ante, so that the countries will get support and then eventually sustainably be able to manage these risks by themselves. Now, to date, the countries, some of the countries we have are working with include the Gambia, Madagascar, Zimbabwe, Mauritania, Niger, Sudan, and Mozambique. We are in the process of developing two programs in Malawi and Zambia. Several African countries are all in line in the pipeline. I have to say to Eric that Rwanda somehow is not in our pipeline. So it will be interesting to bring them also to join the implementation of AGRIFI. Now, as an early benefit, as I said, the program's been implemented for just over 2 years, 2.5 years or so. Last year, a country like Madagascar that joined for the first time received a payout from ARC to provide rapid assistance to communities in the Great South of the countries that were affected by the drought disaster. And with this kind of a payout, the government is able to support those countries to provide the immediate assistance so they can overcome the immediate impact of the drought. And you could imagine that most of these people are small-scale farmers and rural dwellers and women. So the government was able to help them because of the payout that was given to them. Now, I had mentioned that we have two financial instruments. One is what we call the ADF allocation, or the grants that we at the bank, African Development Bank, give to the countries for their development in general. And they use part of it to pay the premium to ARC. So this is the first instrument that we use for now. It's quite limited. And so recently we have elaborated and established a multi-donor trust fund with 2 donors, including the FCDO and the Swiss, to develop this multi-donor trust fund so that we can bring in more countries. And a few other donors are also interested. Now, the country's own budget from their national budget is one of the means that we hope that the countries will use most in the future, to enhance sustainability. Let me use a couple of minutes more to talk about the initial key lessons that we have learned. Initially, there was a low uptake of the program by the countries, and this was because of the cost of the premium. The countries did not appreciate insurance in risk management, as insurance of this type is quite new in Africa, and so the challenge of appreciating insurance, has to take a bit of time for the countries to understand. They also needed to understand the exposure to disaster risk and the need to enhance disaster risk management information and government policy. So these are some of the things we are addressing through the elaboration of the disaster risk financing strategies. Now, in addition to the difficulty in the countries paying the premium, we learned that the COVID pandemic also exacerbated the financial challenges of the countries. And so we see the need for more or an additional instrument for financing disaster risk. We also see that there's need for capacity building for the countries to understand technical and policy issues in developing the strategies. And then it's been important, the lesson we have learned also is to mainstream DRM in the bank-funded baseline agricultural projects in the various countries. So we don't only have it as a standalone. So the recent countries we are working in, we are embedding disaster risk financing into baseline agricultural or resilience programs in the countries. And perhaps the last thing I will say is that there's a need for partnership. This is a huge area. And so all the partners need to come together, this being new in Africa, so we can come together and work together and develop the financing of disaster risk on the continent. And perhaps to say that there's a need for a third instrument. So we welcome other donors or partners who want to work in this area to come up with other instruments for financing disaster risk on the continent. So I will stop here, and if there are any questions later, I will be very happy to address them. Thank you for listening.
Cecil, thank you so much for presenting all the work that you've done, the amazing work done by ADRIFI. I also hope that this is a start of discussion between ADRIFI and the government of Rwanda, as was suggested a bit earlier in the presentation. That would be really amazing. Again, another example of, in this case, a bank that is trying to really work very closely with governments, trying to identify the demand, to identify different instruments that will respond to different types of risk, taking into account sustainability. Cecil has also highlighted all the challenges that we have from all of us being used to a model in which we wait for the disaster to happen, and all the implications it has related to the payment of a premium, the COVID, etc., etc. It's really the title of this presentation about behavioral change. How do we change the mindset around disasters, and how do we make sure that we all understand the importance of planning in advance, as this is a way to be more cost effective. So thank you so much. We invite everyone to post any questions on the chat. We are starting to collect them, and we'll just answer them a little bit further down in the presentation. In the meantime, in the chat. So in the meantime, I'm going to move on to our next speaker, Mr. Andrew Mood. Welcome, Andrew. So Andrew, as I said earlier on, he's also working for the Africa Development Bank. He is leading the Agri SME Development and Finance Program in the bank, which is charged with de-risking and enhancing the provision of finance to small and medium enterprises across the agri-food system. Andrew also was the 2016 recipient of the Normal Borla Award for Field Research and Application, recognizing exceptional science-based achievements in international agriculture and food production by an individual under 40. I'm not going to ask if you're still under 40, Andrew, but for everyone to know, he was under 40 in 2016. He has a PhD from Cornell University. And again, I think Andrew has a lot of experience working with different types of stakeholders, including universities, ILRI, etc. So, Andrew, sorry, my son, as you know, as usual in this modern world, my son is trying to see who am I talking to. So I think we had agreed on a few questions that we're going to discuss. I'm going to share them with the audience so that they know what you're going to be talking about. So the questions are around: how is the Africa Development Bank mainstreaming climate and disaster risk financing solutions, in particular in strategies that involve SME resilience? The second is, what are the key challenges concerning the risking and enhancing the provision of finance to SMEs? And again, what is the bank's approach to engaging with researchers and governments? So over to you, Andrew, and welcome, and thanks again for joining us in this panel.
Great. Thank you so much, Marcela, for the invitation. It's a great honor to be in this panel and to follow along the presentations made by Eric and, of course, my colleague, Cecile. Cecile in particular is the, he leads the bank's program that champions really the bank's commitments to disaster and climate risk financing, as he has mentioned. And to the extent that we provide support, you had Cecile talk about the importance of mainstreaming this program into the bank's portfolio, and particularly the portfolio of investments that are in sectors that are particularly climate vulnerable, of which agriculture is. So when we talk about the bank and how we mainstream climate disaster risk finance solution, also in the context of behavioral change, I think we think about this also the bank's point of view as the incentives also to deploy deploy and develop projects and that are aligned with the climate risk financing principles. So at the level of our board, the very highest level that determines the bank's priorities, the bank has prioritized climate financing as the single greatest binding obligation for our current window of resources, of investment resources. So between now and 2025, the bank has set a target of 50% of its investments to be climate financing, and of those, 50% of that to be in adaptation. So I think it has one of the most ambitious climate targets of the MDBs. And what this then does, it aligns, it supports investment officers, it supports our teams that are working with the countries that are designing projects that are aligned with climate financing. And so for us, particularly given the focus on adoption, when you talk about climate resilience and adoption, certainly the climate risk finance and insurance agenda is big on the plate. So you'll find therefore that programs like ADRIFI or country programs that are now beginning to prioritize the importance of climate risk financing are able to get higher allocations of resources. Now, these resources, what type of resource, or how are these resources deployed? I think Cecile has already defined quite a number of them. We at the bank, maybe jumping to the question you asked about how we relate with the government, with governments and with researchers. I mean, in the end, governments are both our shareholders and our clients. And we serve as technical advisors, in one hand, working hand in hand with the government to develop for each country, each regional member country that we finance, a country strategy paper. And this country strategy paper is based on, it's actually led by our research department, in conjunction with the relevant country counterparts and stakeholders, in a very exhaustive process that is revised every 3 years. Almost similar to a real stakeholder engagement process that Eric defined, but more generally across all sectors and across all priorities of the government. More and more, we're now starting to see the governments also prioritize climate financing, and you see this also because of their commitments to the national determined contributions, their recognition that climate finance comes with a certain kind of concession as donors and MDBs and others seek to underwrite the transition to net zero. So more and more we are seeing these strategies and these commitments really begin to increase the allocation of resource to climate disaster risk financing programs. Now, with regards SMEs, SMEs across sector, but particularly in agriculture, they are really the small medium enterprises are the key. They're the backbone of the food systems, and in terms of the job opportunities that they provide, in terms of the over 85% of the food that is produced and marketed and consumed in African countries are delivered by small and medium enterprises, from the level of the farmer to processors or retailers and so on. So we take the bank as a real growing commitment to supporting agri-SMEs. But within the climate, within agriculture, they're particularly climate vulnerable sector. So we have the droughts, the floods, the climate-induced pests such as the locust infestation recently. All of this adds a premium to the financing of SMEs, which already, given their fragmentation, are a sector that has quite a large financing gap. In the agricultural sector for SMEs, it's estimated annually $100 billion of financing gap. And so we are now beginning to increase our commitment, drawing on board this climate concession and climate finance, working with a range of countries that are now starting to increasingly put their public resources into risk-sharing facilities, such as one we have developed in Ghana, the Ghana Incentive-Based Risk-Sharing Facility for Agriculture,
Thank you, Andrew. We may get back some questions clarifying this exciting work you're doing under the Building Resilience for Food and Nutrition Security in the Horn of Africa project. I think from this conversation, this presentation, and also linking to Cecile's presentation, I would like to highlight the call for new players. I think it is really exciting to see institutions such as the Africa Development Bank so actively involved in this topic. And also, I think, I remember years ago us thinking about how to link climate change and disaster risk management. And clearly, here you were talking about the focus and the commitment that the Africa Development Bank is doing in the area of climate change, with a particular focus on adaptation. We all know that in the past, it's actually much easier to invest and to fund projects in mitigation. But clearly, there is a call from we all know that we need to identify ways to work in adaptation, and having institutions such as the Africa Development Bank leading and making sure that such a high percentage of their commitment has to go to adaptation, I'm sure is going to help quite a lot. The other area that I would like to highlight from this presentation is, again, we have been talking earlier, we talked to Mr. Rigamba, talked about his experience as a national government and involving all of the partners. And then Cecile again, talking about national government. But I think it's really exciting to see that there's also parallel work that is being done at the SME level. I think we all know that at the end, those affected are households or SMEs. And of course, therefore, it is important there's coordination between the work that is being done at the different levels with different stakeholders. So thank you very much. I'm going to move to the last presentation we have, and after that we're going to have a Q&A session. So please, everyone who wants to ask any question, it can be a clarification or it can be any point around the opinions that have been provided by our panel about lessons learned, that I think they've shared interesting lessons learned, and I'll try to summarize some of them. But again, please feel free to drop them on the Q&A. So I'm going to move to our last presenter. And his work has been mentioned already through the day, and again by our speakers. It's kind of like one part of this puzzle is the African risk capacity. So the African risk capacity, as we all know, is a specialized agency for the African Union, which was established to help African governments to improve their capacities to better plan, prepare, and respond to extreme weather events. It is run by African Union member states. So again, it has a huge quality and advantage that it works with the governments. And I think I was involved earlier in some of the strategy, trying to understand lessons learned from the African risk capacity. And I had the opportunity to interview many high-level players in this field. And I was amazed by the recognition that the Africa Risk Capacity has in having increased the awareness among governments in African countries, saying like, look, when we used to, at the beginning, people wouldn't really know about, it was really a new topic, disaster risk financing. And now, like, it is really part of the agenda of governments. The participation in all the meetings is very active. So again, I think it is exciting to have Mr. Valmern Kirume as a representative of the Africa Risk Capacity. Mr. Valmern has over 23 years of experience working in multicultural environments with a very deep understanding of insurance. So again, we have been talking all day about the challenges to get people to buy insurance. And I think, as Cecil mentioned earlier, we face huge challenges to get countries to buy insurance. Of course, as we all know, for a government, it's hard to justify buying insurance when they have so many other urgent needs in the table. This year, even worse with COVID. But again, the African Risk Capacity is now in a very strong position. So I think he has not only the view of the African Risk Capacity, but also he has been working in the London market with Lloyd's, and he worked with PwC, Ernest Young. So I think he not only has the experience of working with ARC, but also he has a view of working with from the private sector and from the insurance perspective. So I would like to invite Mr. Kirume to share his thoughts on his experience with ARC, working with national governments, your experience with how to influence behavior, how to create ownership with the governments. But again, I would like to miss the opportunity that you can also share some of your insights coming from having also worked in the private sector, some of the challenges that you think we have in trying to get the demand and the supply for insurance or for financing instruments to be successful. So I will hand over to you. There's a bit more information always on the slides from the programs if anyone wants to look at it later on. Over to you, Malvern, and welcome to the panel.
Thank you very much, Marcela. The advantage of going last is that, and with also having incredible partners like the FDB, is that they do most of your work and they've already done that. But before I start my comments, I just also want to call upon Mr. Rugamba. We have other countries on board in the ARC mechanism, but we are surely awaiting the day that Rwanda becomes part of us. So just also to make that call. And then I can start now my remarks. So yeah, as I mentioned, a lot of the experiences that we've had have actually been shared in part by Cecile. But essentially, I think, just to echo your points, our experience has really been that we were able in the first wave to quickly mobilize support from quite a huge number of countries for the ARC mechanism. So clearly demonstrating that, the ARC mechanism was long overdue and that there was a need for disaster risk management to be at the center, of the political discussion. And then secondly, also our approach of, embedding the ARC programs in already existing frameworks within the countries has also helped us, to gain a lot of traction, because we're not trying to disrupt, but essentially we're just plugging into the systems. So in terms of the easiest ideas, it's going to be a repeat, but I think it's worth mentioning that, disaster risk management is viewed as very important by countries. This is worth repeating. And essentially, we start off with disaster risk management, and then essentially when you also go down a level to disaster risk financing, there's also wide recognition that, this is a key part, of the disaster risk management framework. And then from an ARC perspective, uniquely, risk pooling is also seen as very efficient way of transferring risk, but perhaps more importantly, also as a show of African solidarity, in a very unique way. It's not just saying, yes, we're together, but actually we're together in the risk pool where all the African countries are transferring risk and also contributing to the protection of their vulnerable populations. So these are some of the ideas that are very easy to sell and that are easily accepted, by the majority of the countries that we've actually dealt with. And then the other point, which Cecile made indirect reference to, is actually payouts help. And this is insurance is still nascent, on the continent, and I'll speak to it a bit later. But it really helps. And of course, also to echo the comments made by Mr. Rugamba in terms of having an insurance mechanism that is linked to the money out system. So essentially having a mechanism that is able to disperse funding to the people who are in need is also very important. And that's really been, a very successful part, of ARC. And I believe that we are the only risk pool, or at least we're the first risk pool to have insurance that is linked to pre-approved contingency plans. So having said that, what are the challenges? As Cecile mentioned, the availability of funding to pay premiums is always, has been our biggest challenge. And if I link that with sustainable insurance schemes, if you're looking at it from a purely commercial insurance viewpoint, you need scale, and you need consistent participation, and you need growth to be able to sustain a risk pool. And without premium financing and without consistent participation from the African countries, without consistent participation due to or limited participation due to the shocks such as COVID, this threatens, the sustainability and viability, of the risk pool. So the other challenge is also the fact that insurance doesn't exist in a vacuum. Insurance is only, if you remember my hierarchy, there's the disaster risk management, there's the financing, and then insurance is at the third level. So really what we really need to do is to establish holistic disaster risk management frameworks in the various countries that we're involved in. But as Cecile said, we're in partnerships, because it is very difficult for one, for ARC or for AFDB, to be able to bring to bear all the various tools and resources that are required to build such frameworks. So we really do need smart partnerships that can actually help to deliver, because this problem, is much bigger than a single entity. And then, of course, the other issue which we have to mention, especially on the continent, is the size of the protection gap. If you look at the insurance penetration, you're looking at about 3 to 4%, of the people on the continent being covered by insurance, which leaves a massive 96% gap in protection. And there are a number of reasons for this. And when you sort of overlay it in terms of the sovereign aspects, clearly you mentioned also, Marcelo, in your remarks, that there's always a competition for resources, at government level. So are you going to pay? Are you going to invest more money in building schools, or are you going to pay a premium? And how do you justify choosing a premium over school over schools? And then the other issues also around just the insurance culture. There's yes, there are some issues that are related to regulation and trust that are contributing to low uptake, but there's also an insurance culture which is relatively low. So we need to there's a change that's required in order to bring about the acceptance that insurance is actually a tool that can be used from a financing perspective, especially by the governments themselves. So I think that those are some of the challenges that we've seen, and I think they also echo some of the points that were made by the earlier speakers. Now, in terms of culture, I just really want to start by maybe giving my not my own version, but just a version of the definition, because I think it's very important to understand the key components of culture and how we can actually, by addressing the key components of culture, that's only how we can actually bring about sustainable change in behavior. So in terms of culture, the key components are behaviors, knowledge, beliefs, and capabilities of a group of people. So the behavior is important because what we do, it becomes what essentially forms the habits. So that's our daily that's our daily norm. And I'm not one for cliches, but there's one cliche which basically says that culture is strategy for breakfast. And my translation of that is basically to say that if you have an empowering culture, you will have a better route to sustainable success. So what do we have to do, to change, the culture, or to change our current behavior? We actually have to look at the beliefs, and the capabilities of those groups that we're trying to change. If you think about that, in a corporate setup, if there's a change in strategy, we all know that humans naturally want to resist. They don't want change. We all like to be things to be the same. But for you to actually win that, that battle between inertia and trying to move to a new strategy, you have to start by addressing, the beliefs and some of the norms that the people who you want to actually effect that change. So that's it's undeniable, and people who have worked in behavioral science will tell you that we really have to address the key challenges that affects people in terms of sticking to their behavior and not wanting to change. So we really need to create interventions that create an environment that is really that makes it easier to actually effect change. And it really starts from the individual level because there has to be a willingness to change. And then from there, you then address the group, because at the end of the day, you remember that the definition of culture also is it a group. Culture doesn't really come from one person. So what we have to do is to really start those conversations individual level, but really target the groups. And the groups here, it can be an institution like yours, Marcella. It can be the Minister of Finance in Rwanda, AFDB, Adrifi, Cecil, Andrews, SME focused, work. It can also be at ARC, so there's and obviously it will go up to the level of the countries. So we really have, a lot of work to do. And I think that if I reflect, on the past, we haven't really paid enough attention to the need to really change culture. So yes, we go into country, we talk about disaster risk management, but we haven't really focused on the importance of, interventions that can, change the culture to really, achieve the results that we want. So I'll end there. Thank you very much.
Well, this is really inspiring. I feel like it's a beautiful closing to the speeches to talk again about how to change culture, right? I think that was one of the main questions we had at the beginning of the session, the title of this presentation. I think there has been a lot of progress made from a technical perspective on developing models to assess the impact of disasters, on developing financial instruments. And I think there is this human component on which we need to focus, right? Which is how do we change culture? How do we change behavior? And I think InsuResilience has done amazing work in trying to document some of the lessons learned. I mean, I have to say, I'm already keen to listen to this panel again, the recordings, and write down some of these lessons learned. I mean, I think there's a lot of things you've said, and what I like is that these are things that have worked already, right? Again, it brings me back to the question of changing behavior. I think there's a lot we can learn also coming back to the evidence that we were discussing earlier today in the beginning of in the morning panel around what can we learn from organizational change? What can we learn from other sciences, right? Behavioral economics, which is one of the things we want to do at Genesis Analytics. So extremely inspiring. I think how do we change beliefs to influence action? How do we define interventions that take that into account? Again, I think we're talking about the same things we mentioned at the beginning: empowering, ownership, making sure that we are all at the table. And I think in this panel we have an amazing group of people representing the different sectors and different type of stakeholders that need to be at the table. We have a few questions from the panel, which I'm now gonna raise. In the meantime, I would invite you, we have a word cloud that our colleagues from InsuResilience will put on the platform, inviting you to answer the following questions. So after listening to our sessions, where do you see the greatest opportunities for for climate and disasters financing and insurance? It can be a word, ideally a word, because it's a word cloud, and we're going to share your thinking at the end. So any word that comes after this discussion is great. While you populate and you type of answers, I'm going to start asking questions. So the first question is to Eric. Eric, I'm not going to mention people on the chat, who's asking the question. I'm just going to, in the interest of time, I'm just going to focus on the question. The person is asking, I would like to know the coverage rate of the insurance in Rwanda and some of the challenges for both the implementer and farmers' perspectives. Again, we're running to the end of the session, so if I can keep the answers to a couple of minutes, that would be great. Eric.
Thank you, Marcel. Thank you for Edmond for the question. I think coverage rate, if you look at it in terms of headcount, according to FinScope 2020, we stand at 17% of the adults having insurance or uses an insurance product. That excludes the universal health insurance scheme. So we tend to exclude that because almost that one stands at around above 85. So we're trying to exclude that so that we can keep ourselves challenged. If you look at it in terms of total premiums as a percentage of GDP, we are doing quite badly. We are around 2%, 2.1% of total premiums as a percentage of GDP. So that's the penetration at the moment. Challenges to the implementers, quite a number of them. Of course, information asymmetry is one of the biggest problems. Information around different parameters for designing the schemes, but also in terms of really payouts and the claim settlement. So it's quite still an issue on different fronts, especially in the agriculture sector. Definitely creating awareness is quite expensive, especially in developing countries, because people are not yet more equipped with the understanding of some of these schemes, never mind that when they are hit by the disasters, they are hit harder, but they are still struggling to appreciate them and the role they play in their lives. And so that's a challenge to the implementers. Distribution of the service of these schemes across the country, across different parts of the country is quite costly. And of course, climate change just worsens this. You think you have properly captured the risk profile for the country or for the certain segment before you know all the projection numbers are messed up by climate changes. So yeah, satellites and other measures are used to capture data, but it's not going to be, it's not enough to capture that and predict very well and be able to measure and price the risk. To the farmers and the beneficiaries, I think, yes, the products are very new to them. They are first generation to use this kind of financial instruments, so they are complex for them to understand. And their level of appreciation is quite. It will take some bit of time. You need to appreciate that. And two, their purchasing power is low because some of them are low-income earners. So, in the interest of time, I'll pause here, Marcel. Thank you so much.
Thank you, Eric. We have a question for the colleagues of the Africa Development Bank. I don't know if Andrew or Cecil want to respond to that. The question is, what is the landscape of public asset insurance in Africa and what are some prospects for this? And then Jonathan, who's asking the question, says the continued provision of infrastructure services, for example, after disaster strikes, can alleviate suffering. What importance does this kind of insurance have in CDFI on the continent? So again, if you can keep the answer to 3 minutes, that would be great. Andrew or Cecil, I don't know who wants to answer.
Marcela, please could you repeat the question?
Sure. What is the landscape of public asset insurance in Africa, and what are the prospects of this? So this is really about infrastructure insurance in the continent.
Andrew, do you want to go first with the infrastructure or something?
Sure, I can take a cut at this. So with regards to infrastructure, of course, infrastructure is hugely important, not just for development, for mitigation purposes. So in fact, one of the bank's largest initiatives related to climate finance that was launched by our president, working jointly with the African Union and the Center for the Global Center for Adaptation. What's called the African Adaptation Acceleration Program, AAAP. And that program has 4 pillars: climate smart agriculture and digital technologies, empowering youth through jobs and enterprises, innovative financial initiatives, which include the ADRIFI that Cecil leads, but also includes catalytic agri-SME financing. But then the fourth one is an infrastructure, what they call an infrastructure resilience accelerator. I think the recognition here is as for example, you face likelihood of greater floods. Already, a lot of road infrastructure is affected by flooding. So the new ways to build roads that will be resilient to floods. Also, the energy sector. Many countries in Africa are have the energy powered by hydroelectricity or hydropower. Of course, hydropower, the strength of that will be affected by the flows of rivers, which are already starting to pan down. So how to fund this kind of infrastructure? Energy, of course, other than hydro, is also going to be big. There's this big push to stop, fossil fuel. Of course, what the Africans will argue is that energy being central to development, and Africa only contributing now a small share to global greenhouse gases. What is the support that is needed to ensure that if we're going to be moving away from infrastructure, from coal and other fossil fuels to other more energy and climate efficient sources like maybe natural gas and so on. We need to be able to fund those in intelligent ways. So in fact, at the bank, we are working together through this program with the GCA. They're putting together a resilience bond that will be funded largely from climate financing to finance climate resilient infrastructure. And just finally, I think there was a comment around public assets. And also the way public assets are being defined is starting to shift in the context of climate change. And particularly for mitigation purposes, I think agroforestry is taking a much bigger, so the protection of forestries and the tapping into the climate, the carbon credits, that kind of asset. So the bank has actually invested very heavily in what is called the Great Green Wall, which is a whole reforestation effort that goes from the Sahel all the way to the Horn of Africa, and is considered part of also our contributions in the infrastructure space. So maybe I will leave it at this. And Cecile, if you have anything further to add.
Yes, maybe Marcela can give a clarification, because the line was actually cracking when she was reading the question. Is there anything that you still need from my side?
No, Cecil, thank you. I think Andrew's response was very comprehensive, but I also know that Malvern wants to share some of his views on this topic. So if that's okay, we can hand over to Malvern, and thank you both of you for the views of the Africa Development Bank.
Okay, thank you.
Thank you, Marcella. So, yeah, the landscape of public asset insurance is also affected by the low uptake that I mentioned earlier. There's still some countries that would tell you when we approach them, that they don't even insure a lot of their assets. So there is still some more room for a change in culture, which we were just talking about, in terms of the approach to public asset risk management, and specifically insurance. But also, having said that, as was clear from Andrew's comments, the bundling of insurance with the financing is where I think that's where the key area or the key opportunity lies, because then, and also, it's not just insurance, but also the resilience to say, if we know that in 5, 10 years or 20 years from now, we're going to have worse floods, stronger winds, more tropical cyclones, then we need to be able to build, climate resilience infrastructure. And what do we need to do when we are arranging the financing? So I see that really as a great opportunity in terms of making sure that the needs are taken care of. Thank you.
Thank you so much. So we are really about coming to the end of the session. There's still one more thing we would like to do. Actually, two. One of them is to remind everyone to put the words on the chat answering the question that was raised earlier on. So after listening to the session, where do you see the greatest opportunity for CD RFI? And we will just show you, as the last step in our session, your answers. I hope you have been inspired by all these lessons learned shared by our colleagues. But before that, and to give you a little bit of time to answer to that question, we have one final question for our speakers, and I mentioned it in advance to all of them, so I'm hoping that they have something prepared. I would like to be in their place and find it a bit of a hard question to answer. Looking ahead in 2 weeks of time, what kind of headline would you like to read about COP26 and the topic of climate risk finance solutions? Is there anyone who wants to go first, or should I just decide? I don't see any hands raised. I'm going to do it in alphabetical order, starting from the end. So Malvern.
Okay, thanks, Marcelo. So my headline would be $1 billion of financing agreed for CDRI on the African continent, targeting the continent's most vulnerable. That will be my headline. Thank you.
Brilliant. That's really great. We can vote at the end. Eric, you're next.
One voice, one continent, one voice, one earth, through CDRFI.
Very beautiful. Speaking to our topic of today about getting everyone on board. Cecil, your turn.
Yeah, I would say that donors agree to significantly fund disaster risk financing. I hope you heard me.
Marcelo, you're on mute.
Yes.
I'm sorry, thanks, Andrew. I couldn't hear what Cecil said. I heard him saying governments agree to something, but I couldn't hear the end of the sentence.
Let me go again. Donors agree to fund disaster risk financing on the continent.
So I assume you're talking about the African continent.
Yes, the African continent, yes.
Thank you so much. Andrew, what is your headline?
Well, I'm a scientist, and these poets here have come up with such good titles. Well, I'll say this since I was talking about the bank. Africa, the AFDB's Africa Adaptation Acceleration Program receives commitments to fund its $25 billion climate financing commitments.
Good luck with that. We're all eager for that to happen. Thank you so much. So I'm just checking here from the InsuResilience team. I think we have the workload on the screen. Marilyn, are people seeing it? Oh yeah, it is there. So I'll see if I can see it, see what came. There's not like real, like one final say, but I think very inspiring to see Global South, voices and ideas for the region. So clearly, again, we're talking about integrating people from the South, sustainability, SMEs, shock responsive social protection, which is a topic I'm fascinated by. How do we get money to the right people? Working together, bringing great ideas together, fighting climate change effects together. So clearly there's a lot of togetherness, bring great experience together, supporting our countries. I mean, what a better way to close this session than talking about together, right? I mean, I think, we wanted to learn about how do we change behavior, how do we improve engagement. We've heard many lessons learned around like the challenges of changing the thinking and the way we see insurance and disaster risk financing, the challenges of moving from an ex-post model to something which we plan in advance. We've heard about the challenges of all the competing priorities that the governments have. All the changing the behavior of people, being used to the humanitarian aid, so not really necessarily ready to commit to investing in disaster risk financing, but at the same time listening to presentations such as that of Mr. Eric Rigwamba, sharing this example of such an inspiring way to do it, right? Putting people at the center of the design. And I think followed by the examples of the African Development Bank and the African Risk Capacity, which model is really based around working hand in hand with the governments, and in Andrew's case with SMEs. So I would like to thank you all very much for this wonderful panel. I'm sure that our colleagues from the InsuResilience will be putting together a summary of all the lessons learned, and I will make sure that I'm contributing to it. I'm really excited, and I think I've learned a lot. I really learned a lot, so I want to thank you all. Also to InsuResilience for organizing all the session, and to everyone who was involved in preparing this presentation. I understand that Monica, the host of the session today, is going to take over in a moment. So I think, I don't know if we just have to stay here or we have to, I think we are in the main room. So I guess we can have a couple of minutes break while the rest of people come back. Everyone, thank you so much. Have a wonderful evening.
Thanks to you.